The market got a little whiplash today as President Trump teased and then later denied firing the Fed chair or planning on firing the Fed chair. Stocks hung on to some gains by the end of the day. We closed off the lows near the highs of the day, but you can see the volatility brewing beneath the surface. As always, you can catch the full breakdown of today's market outlook as well as today's trade idea at marketscholars.com. There's a link to that in the description as well as the pinned comment down below. Today's big headline came mid-morning when reports surfaced that President Trump was considering firing the Federal Reserve Chair Jerome Powell. Stocks, you can see, sold off here immediately. The S&P dropped nearly 0.8% intraday, and volatility jumped up off the news before rebounding back by the end of the day today. Interesting to see that on the news the yields rallied. So on the news that that we might fire the Fed, who's not cutting rates, the yields rallied up to the upside before pulling back by the end of the day today. And you can see the dollar fell, which that's not surprising, on that initial release before rising to close, still with a loss on the day, but before rising and continuing this bullish trend that it's been on. But of course, as Trump walked this back, President Trump walked it back, the markets rallied up today. You can see financials, which were down initially, took off and finished much higher. Well, not necessarily double what the markets did today. Real estate and healthcare actually held ground pretty well during the decline, and that's why they finished with some pretty good gains. They didn't really build off of this peak, whereas financials did get above its pre-Fed chair firing release peak. And of course, energy on the other end of the spectrum really lagging going into the news, lagging during the news, and lagging after the news. So despite the headline-driven chop, risk appetite held up. You can see a lot of green here on the chart. Today's message from the markets, at least, was about resilience. Stocks closed slightly higher. Yields ended up coming back down by the end of the day. Commodities held up pretty well. You can see some pockets of strength in technology and consumer discretionary and healthcare. I'll show you kind of what that means for our breadth and trades here going forward. Before we do that, as always, if you're enjoying this quick breakdown, make sure you give us a like down below with that thumbs up. Subscribe to the channel, hit that bell so you know when tomorrow's video is posted. Share the video, comment down there as well, but share this market outlook with anybody else that you think would benefit or would be interested in watching it. We do appreciate your support. We always have had really, really good support from our Market Scholars community. Now let's transition. Let's talk about today's market action and how that matters for the days ahead and how that impacts our positioning going forward. We're seeing some pretty clear signs of improved breadth today after yesterday's bomb. Back up above 565 on the advancers, minus the decliners. When you look at the number of stocks above the 50-day moving average, that jumped back up from just over 300 to 322. So nice little bounce and rally in breadth, even though we're not back, the strong bullish levels below moving averages. In this case, it was better than what we saw last night. What's even more encouraging is that small caps held their gains by the end of the day today. The Russell 2000 shows some leadership coming off those June lows, signaling a broader base of support underneath this market beyond just the mega caps, which is basically all that moved up yesterday. So again, we don't necessarily want a long-term run. As you can see, this ratio is positively correlated with the markets. But when we're in a mature intermediate run, it's good to have some broadening at the end, right? And that end can last a few weeks, but it does kind of go to show the sustainability of this move, at least for another few weeks. We're seeing some steady rotation into some of the safety areas, more defensive areas in the markets like healthcare and real estate, both posting some solid gains today, adding again more evidence that this rally may continue this little broadening out after one day yesterday where it was nothing but technology. Intermarket signals confirm some of that shift too. When you see that gold holding up, silver staying above its averages here, natural gas pushing up to the upside, copper holding its big gains post-tariff news, platinum you can see rallying, but Bitcoin pulling back a little bit here in the after hours tonight, but rebounding back in a strong way. So you're starting, even the soft commodities kind of join the picture here down, again reflecting a broader sense of risk appetite beyond, again, a handful of equity names. So the S&P still sits near all-time highs, and this rotation could help sustain this uptrend for just a little bit longer, considering how bullish and all the clusters that we've already gotten. So we're not necessarily seeing like this strong conviction here. So I'm not really sure like how likely we are to break 6,300, but that's a really, really important level, that if we can get above and stay above, that we can kind of hold on to this move post options expiration. So with all this rotation going on and sentiment still remaining relatively bullish, but softening, right? Cracks, and we saw yesterday and a little bit here today underneath the surface there. How are we positioning around this? So I talked about that a lot more detail in the full version of the market outlook, including a rare bearish trade that we've done in the market outlook live, along with today's market outlook post. I also share obviously all the technical charts, the intermarket relationships that we dive into a lot more details on kind of what I'm seeing from the charts and what I expect to see beyond. And we went even more into detail in today's technical analysis class for our core and premium subscribers at Market Scholars. Our foundation members and any other subscriber gets access to the full version of the Market Outlook video for just $29 a month. Works out to be less than $1.40 a video, or $299. That's obviously a very, very small cost when you consider the literally thousands of dollars that the Market Outlook trades have posted in the first 6 months of this year. I do appreciate you watching. Thank you very much for coming on today. Remember to like the video, subscribe to the channel, comment and share the video. Follow and like us on Twitter and Facebook as well as other social media channels. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.